Another kind of solution might be what we would call restricted ownership shares. And currently, this might be something that applies only to privately owned media corporations, because if it's publicly owned, it's owned by the state or to all taxpayers, it doesn't really apply, or even if it did apply, it would meet this criteria. But if you're thinking about private media ownership, private media corporations, we could have a rule that private media corporations must be owned by a very large number of people. And furthermore, that no individual or organization, even if that's an investment firm, should be able to own more than a very small percentage of that particular media corporation. For example, if we made that rule as small as 0.01% of the voting shares that no one person could own more of, that would mean that no media corporation could be owned by fewer than 100 people. And this makes controlling what that media corporation does very difficult. And that's the point. This rule means that media corporations have diverse owners, which reduces the risk of ideological ownership. It reduces the risks of conflicts of interest because it's very hard to control the media corporation, but it allows people to invest in media corporations. They just can't hold more than, in this example, 0.01% of all the voting shares that exist. So you could still have a vote at shareholder meetings, but no one individual or organization or group would have more than 0.01% of the voting shares. It's very important that this calculation, the percentage, must be based on all investment vehicles that anyone or group uses to purchase shares. Otherwise, what's going to happen is people will use proxy companies to control a higher percentage of any given media company. This restriction on ownership might only apply to media corporations that have a national reach, or perhaps that exceed a certain threshold of market control. Because if we apply this rule to very small local media companies with, for example, circulation that's limited to a village of a few hundred people, then this wouldn't really make much sense, and it might actually be impossible. However, the restriction should apply to media corporations that do have a national reach, or at least reach a very high percentage of the population, and we'd have to decide on what that would be. It could perhaps be something like 10% of the national population. When that threshold is reached, no one can own more than 0.01% of the corporation. It's also very important that this limitation apply to all companies that are controlled by one individual group as an amalgamated percentage. The reason for this is that if we don't have this, someone could run a series of separate corporations that each stay under the market threshold but collectively exceed the threshold and achieve a national reach. We have to make rules that take into consideration malicious actors that might want to exert control over society. We have to put ourselves in the mindset of someone who wants to control society and think of how do we stop them. Another way of ensuring a very diverse media environment is to limit the share of the audience that any one company can control. We could say, for example, that each media corporation must not control more than 20% of any audience, or in economic terms, of the market. This must apply to each geographic area as well as to each type of media, for example, newspapers or social media or television or magazines. This will ensure that everyone has access to at least 5 channels within every type of media. It's a way of ensuring a very diverse media environment. The implications of this rule would be that we have to break up any media corporations that grow large enough to exceed their maximum market share, and we do this to maintain a diversity of perspectives and voices. When media corporations reach the threshold, in this example 20%, then they would have to diversify their ownership, or they would have to split into multiple companies to keep the diversity in the media environment. There are serious implications for this particular issue in rural places or small markets. So we have to change how we license and operate rural or remote media corporations to ensure none exceeds 20% of any market. In small markets, this is going to be quite challenging, but there are ways around it. For example, local radio and television stations could expand their geographic coverage to ensure that there are always at least 5 stations within reach of every small rural town. Newspapers and print magazines could distribute less frequently, or they could be distributed across a wider geographic area to ensure that every area has at least 5 sources of print media. And in the modern world, we might not need print media. These rules are up for debate. The point is that we need to ensure that our media ownership does not get too concentrated. These are just some ideas. When thinking about applying them in particular circumstances, they might not turn out to be applicable or possible. Online media is easier and cheaper to distribute, but people need to have internet access. A digital version of the news is also easier to integrate when you have local news combined with national and international news. And this will enable the media corporations to mix their sources of information to cater to local audiences. But this is much easier in a digital format than printing one version of a newspaper for one small village and another village. Economies of scale give advantage to large media corporations, and it makes financial sense for these companies to get bigger and bigger because they can share expenses across a larger media corporation. But the media provides benefits that go beyond what can be measured in purely financial terms. If we were to focus just on the money, then the argument in favor of large media conglomerates would be a strong and convincing argument. But maintaining an informed population, supporting robust investigative journalism, telling local stories, and holding economic and political leaders to account is not something that can be easily measured in purely financial terms. How much is a good society worth in currency? How much is it worth to investigate corruption? What is the free flow of information worth beyond purely financial payments? How much should the truth cost? It is worth paying more money to maintain a diverse and truly free and independent media environment, even if it would be financially cheaper to allow a few big companies to buy up all the media channels and run everything very financially efficient. When we apply this purely economic perspective to the media, it does not serve the interests of citizens, and it does not help us maintain a good society.